So in this video, ladies and gentlemen, we're going to be going over the complete and utter destruction that is Cathie Wood's ARK Innovation ETF. And she does have a couple ETFs. I forget how many at this point, but we're going to go over her flagship ETF, the main one, which is ticker symbol ARKK. We're going to break down how the ETF has performed, the top stocks in the ETF as of now in the beginning of 2023, and we're going to break down the chart and talk about what I'm looking to do. Am I buying? Am I going to be selling it? Am I holding it, if I even am holding it? So hit that like button if you guys find value. Of course, make sure to subscribe as well. If you guys like stock market content, this is the channel for you. And let's just dive into it. So this is ARKK. Again, she has a couple ETFs. I forget how many. I think 4 or 5, maybe more than that. But this is the main flagship ETF. And you guys can see in the past year, let's just dive into it. These are annualized returns, the performance. It is down 67% in the past year. In the past 3 years, the return is negative 13%. In the past 5 years, annualized, negative 2%. And since inception, guys, not even 7%. And I believe, when was this? When did this ETF even come out? Let me actually pull it up here on the ThinkOrSwim app, which we'll talk about, we'll get into in a second. I mean, oh my goodness, this is from back in 2014. We'll look at the chart in a second, but it's, pretty much, it has not done well since 2014, annualized, annualized returns. So if we look here and maybe pull up cumulative, we can see in the past, 1 month, negative 16%, negative 17%, 3-month cumulative return, year-to-date 67%, and since inception about 71% cumulative returns. Not that great. And the calendar year, which you can see, it had a massive year in 2020. I mean, holy crap, this ETF went up 150% 2020, 35% 2019, and during those time periods, a lot of people were getting sucked in to the ETF because of performance, right? A lot of people were chasing the performance, and well, they got clobbered in 2021, and of course in 2022. In 2021, this ETF went down 23%, and in 2022, it went down over 60%. Unreal, guys. So yeah, I mean, overall, it looks like you were better off just buying the S&P 500 as opposed to the ARK Innovation ETF, which, at the end of the day, guys, a lot of these companies, at least in my opinion, are not that innovative. I mean, they're just not. And the fact that Zoom is her second largest position, let's just dive into this. Let's talk about these top holdings, starting off with the number one. We have Tesla, of course. I mean, you guys probably knew that. Tesla is a 9.6% weighting in the portfolio. She owns $770 million worth of the stock, which is insane. And this is actually, in my opinion, probably the best holding in this portfolio, the one that makes the most sense. Sure, Tesla's very innovative, might be overvalued in some people's eyes, which is arguable, and her price targets for Tesla are insane. So in her eyes, it's still undervalued here, which I don't think so personally, but it's not that unreasonable to have Tesla at 10% of an innovation ETF. That makes sense. But what does not make sense? It does not make sense. She has Zoom, guys, a glorified video conference app. I mean, what's so innovative about Zoom? I can literally pull this up and do what Zoom does on multiple different platforms. The fact that she has 8%, 9%, almost a $700 million position in Zoom, to me, that's just ridiculous. I mean, there's no shot will pan out in my eyes over time. Who knows? I could be wrong. But from my research into Zoom, there's no real moat around it. There's no economic moat around Zoom. And Exact Sciences is the third position, which I don't know much about, so we're going to skip over that, but that's 7.3%. And under that, we have Roku, which is another one that's like, oh my God, Roku, really? It's like literally Amazon has a competitor to Roku, and it's pretty much free. I mean, the Amazon Fire Stick, right? You guys probably have that, maybe not. I do. It was like $10, $15, and you have everything that Roku has. You have different options on there. I mean, Roku, in my opinion, really not that innovative, really not that great of a company, but she clearly thinks differently, and she has $556 million in that position. 7% of the portfolio is in Roku. I don't know, guys. That I have strong feelings about some of these companies. I don't like Roku, clearly. I don't like Zoom. Tesla, I like, that's a very debatable one. It makes sense that she has that. That's one that I could get behind. Even though I might not fully agree with the valuation it's at. Valuations, it's subjective. It depends on who you're talking to, right? Then we have Block, which is under Roku. Let me actually come down a little bit here. You guys will see it. Block is one that, okay, I can get behind that at 5% of the portfolio. Maybe there's a little bit too much Bitcoin exposure with Square, Block, whatever you want to call it, guys. Maybe a little bit too much Bitcoin exposure than I would like, but that's a risk with any stock, really. Well, not every company has Bitcoin exposure, but there's certain parts of certain businesses that you might not agree with, that you might not want to be a part of, and that's something that they have to, ask yourself if you want to buy a stock like Square. Is it worth the risk of crypto? The Bitcoin risk, is it worth it? You have to ask yourself that. But Block, 5% of the portfolio. Okay. UiPath rather, is 5%. All right. Coinbase is 5%. So another pretty much pure crypto play. Shopify, which I actually like that company. Solid company. I haven't done a valuation analysis on it in a while, but 5% of that portfolio. I think there's a future for Shopify, of course, and there is competition to Shopify, but you got to realize, guys, competition makes products better. So we'll see if the competition that Shopify has will either eat up Shopify, or is Shopify going to make their product better to eat up the competition, right? It all depends, but I think Shopify is a good holding. Coinbase, it all depends on, of course, crypto. Is crypto in a bull market, bear market? What's the sentiment around crypto? Because if there's negative sentiment around crypto like there is right now, way less trading volume, guess what? Coinbase is going to be making less money, and that's a risk. That's a serious risk. Then under that, we have Teladoc, which I do not like. I think that not the best, not the best economic moat around Teladoc, not the most innovative company. There's a lot of competition. That is $350 million, 4.5%. Now we have Twilio, which is $300 million, about 4%. And if we come down a little bit more here, you guys can see these companies are heavily weighted in the North America region, right? With 96% of them being North America, Western Europe being about 4%, Africa being Middle East being 0%. So I guess no Asia exposure either. And we can see here most of the market caps of the companies are between 2 to 10 billion. So she's betting on small. I mean, 2 to 10 billion is pretty big still. But she's betting on smaller companies that of course could maybe go to 100 billion, right? From 2 to 10 billion to 100 billion. Those are the types of bets that she's making. We have 27% in the large, and then 100%, or rather 7% in the mega cap category, which is 100 billion plus. So yeah, guys, I'm not loving a lot of these holdings. I mean, there's a lot that I disagree with Cathie Wood. I mean, a lot of her investment philosophies I don't align with. She invests a lot in companies that are not making money today, that are not profitable, and they won't be profitable for a while. And for me, that's just too risky. A lot of her holdings are unprofitable companies, and I'm not 100% against unprofitable companies, but to have most of your money in them, that's a little bit risky. And we didn't even go through the other holdings. I mean, I think there's like 30 holdings in that ETF, and there's a lot more risky ones as we get to the ones under the top 10. And I think the expense ratio for ARK is, I think it's 0.75%, unless they changed it. I wouldn't be surprised if they upped that. Let me see here. ARK Innovation ETF, what is it? Yeah, 0.75%. So not only are they underperforming the markets, but they're charging 0.75% to do that. Now, granted, with ETFs like this, to play devil's advocate, they could be underperforming now, which is the case, but who knows? Maybe they have 1-2 insane years. That's all it takes. Let's say ARK rips 100% next year, and then 100% after that, which is unlikely, but let's say it happens. Then the cumulative return, the annualized return would be a lot better, right? So you got to realize there's high risk here, but if it plays out, if it works out for these companies, the ETF goes ballistic, you can make outsized returns, but I'm not banking on that personally. And you guys can see here, this is the max chart on ARK, the ARK Innovation ETF. It was at 21 bucks at inception back in 2014. Now it's at 42. I mean, accounting for inflation, the cumulative return is not that great. I think it was 70%, 75% over that time period, where if you were to buy something like the S&P 500 or something like, look at the S&P 500 in 2014. This thing was at, 182. It's up a ton from that point. It's at over 400 now on SPY, triple Q, and that's not including dividends, by the way. And there's a less, the expense ratio is less on the S&P, so it's definitely outperforming ARK. And we can see here, triple Q in 2014. If you wanted to take, a riskier bet and bet on technology companies in 2014, you could have bought triple Q at $87. Now it's over $305. We're talking a 250% plus return. So yeah, I'm not the biggest fan, guys, of the ARK Innovation ETF. Not the biggest fan at all. I used to own it. I made some money on it during this cycle here, and I knew it was, it was hypey back then. Made money on it. I remember I bought it, I think, at like $70 or something, 70, 80. I sold it at like 130. It was a crazy move. Got out of that, and I'm not planning on getting back in. Let me just be honest. I'm not planning on getting back in. So that's a quick little rundown on her ETF, how it's been doing. And, year to date, it's been up a little bit. It's been doing pretty well so far this year as the overall markets have been ripping. And, of course, a lot of that has to do with Tesla. But overall, guys, if you peel the layers back, it has not been doing well, if we're looking over the past couple of years, right? Over the past decade at this point. So what do you guys think? Let me know your thoughts in the comments down below. I'd love to know, as always, are you a buyer of this? Do you own it, or are you selling it? Let me know in the comments. I'll catch you guys in the next one. As always, if you like this video, hit that like button, subscribe, get up to 15 stocks from Moo and up to 12 stocks from Webull, and feel free to check out my Patreon, which we're building a Patreon portfolio on Patreon. There's also a bunch of charting on there that I post throughout the day, Discord chat, all that good stuff. Check out the Patreon, link down below. I'll catch you guys in the next one. Peace out.